Hi everyone and welcome to the weekly update with me, Richard Perry, market analyst at Hantech Markets. This is for the week beginning the 24th of March. Each week I'll be taking you through the key events that I believe will be driving your investments in the coming days. And certainly moving into this week, Russia remains on the agenda and the impact of economic sanctions on the markets. Investors are concerned that any sort of escalation of the tensions could result in further economic sanctions, and that could spread the impact on other economies such as Germany, which has very close ties to Russia. Now, the other impact that investors are interested in this week is certainly going to be China. Now, in recent weeks, China has increasingly been concerning for the markets with the arrival of the first corporate bond defaults in China, and also the fact that the PMI data has been coming off and growth figures have been deteriorating. Certainly today's announcement that the HSBC flash PMI data was worse than expected has hit the market, and risk appetite has certainly come off the commodity currencies in the trading on Monday. The other thing that's impacting on markets is the dollar strength. Now, on the back of the FOMC meeting last week, the dollar has been strengthening, with Janet Yellen's comments that around 6 months was the time that it would take between the end of tapering and possibly the beginning of the tightening cycle for the States. Now, as I said, this strengthened the dollar, and that has been impacting on FX pairs in the last few days, and certainly the FX pairs on the majors have begun to top out. The euro dollar, for example, has topped out below $1.3832, and that implies a move back towards $1.37. Cable, for example, also has topped out below $1.6580, which suggests a move back to $1.6380. Also, dollar yen has slightly strengthened, although it does still remain range bound within this 101.17 to 102.83 level. That 102.83 level, I believe, will once more be a pivot level for dollar yen. Moving on to the indices, the S&P didn't really have too much of an of a reaction to the FOMC meeting last week, but certainly there was a strength on Friday which saw a push to an intraday high, but then ultimately it closed below there, and actually was a fairly disappointing close on the S&P 500. Now, the lack of data that is corporate data that is due this week, I think, could impact on the S&P, with investors therefore having to focus elsewhere, and that will mean Russia and China being high up on the agenda, and that could mean the S&P might struggle this week. And if the S&P is struggling, then the FTSE will probably struggle even more. The FTSE has actually been underperforming the S&P by over 7% in the past month. So that would suggest any struggles on Wall Street will be significantly shown in London as well. And also, as I said earlier, investors are focusing now on the impact of these economic sanctions that the market has, that the governments have put on Russia, but the ongoing impact that could have on economies such as Germany, which are so closely tied, so that could have an impact on the DAX, and certainly today that is what we're seeing. Now, for gold, the gold trade had unwound slightly last week. There was a push strongly towards that 1400 level. That saw significant profit taking last week back towards the 1320 support area. Now, this produces a bit of a key time for gold. That 1320 level is a key uptrend support from the December low of 1184.50, and also a key support within that uptrend as well. So the gold price has a key week ahead, I believe. So if that 1320 support breaks, that could drag gold quite quickly back towards 1300 again. So we're looking at that level as a key mark this week. Now, the key events that we need to be looking out for this week is certainly for the US. You're looking at consumer confidence on Tuesday, along with new home sales. On Wednesday, we've got the durable goods data, and on Thursday, we've got the final look at the GDP number for Q4 last year, and also the pending home sales. For the UK, you've got the inflation data for CPI on Tuesday, and that could certainly have an impact on sterling. On Thursday also you've got the retail sales data, and on Friday you've got the GDP Q4 number for last year, for 2013. The only other thing that I'm really that interested in this week is going to be the Japanese inflation data. That comes later in the evening on Thursday, and that could certainly pull dollar yen around on Friday trading, and I'm hoping at least we're going to have a bit of a breakout from this rather tedious trading range that dollar yen has been finding itself in the last few weeks. So that's what I believe is going to be happening this week. I wish you good luck in your trading. Don't forget to check out our website with all the daily morning report information, and also the blogs that are throughout the day. If you're on Twitter, you can follow me at HandTechRich. So until next week, I wish you happy trading, good luck, and thank you for listening.